morning and welcome to VSA Capital 5-Minute Morning Miner on Friday, the 25th of July. We're at the end of the week. The weekend's coming up. Everyone can relax. Morning, Paul.
Good morning, and the weather's improved. That's also a good sign.
It's always nice, and I'm out on the course pretty soon. Anyway, there's not a lot of news around this morning. All pretty quiet. It's been a fairly quiet week, actually. But Paul, run us through a couple of things you'd like to talk about this morning.
Yeah, first off, VSA client Sierra Madre, the TSX-listed silver producer in Mexico, they did announce the closing of their first tranche on their current fundraise placement, well above their initial expectations, with the closing on over $19 million Canadian. That was a unit priced at 70 cents per unit, and that is due for money to be used for much more increased exploration work, as well as expansion on production at the Larvotto mine in Mexico.
Yeah, obviously, everybody knows, I think by now, I will be visiting them along with Luca, Avino, and Guanajuato at the end of August. So more to come back from that trip. But yeah, well done, Sierra Madre. I mean, it's hot at the moment. Silver's very hot, and it's still got further to go, as we discussed earlier this week. Carry on, Paul.
Also, well done to ASX listed gold antimony mine redeveloper Larvotto Resources. They've reported that the equity fundraising component has closed on Australian $60 million raised, also well above initial expectation. They've also opened a $5 million shareholder rights issue to the raise to add additional funds at the same price. They had already made arrangement, given this project's robust numbers, for $100 million US of debt funding. But these combined offers of shares and closings on shares and debt have now fully funded the capex to restart the Hillgrove gold antimony mine in Australia. So they'll be pushing right along now in the construction or reconstruction of that underground mine.
Yeah, I mean, taking advantage of the antimony Chinese squeeze, so to speak, where the price has shot up and the hot money going that way. It's funny, I was playing golf a couple of weeks ago with an antimony trader, and he was saying 10 years ago you couldn't give the damn stuff away. He said now it's as rare as rocking horse something. Anyway, there you go. Always good to jump on the bandwagon. Well done. Good raise. Not necessarily is a bandwagon. It could carry on. Probably will carry on. There you go. Keep going, Paul.
Yep, after the market closed yesterday, Newmont put out their second quarter results. They had record quarterly free cash flow to report on improved numbers, both around net income at 1.6 billion or $1.43 per share, as well as an average gold price received of $3,320 an ounce, which was up by 40% on a year-on-year basis. Over April and June, though, they did produce about 1.5 million ounces of gold, which is a fall of about 7% year over year. That would be largely due to mine sequencing and some lower grades in some operations. But all-in sustaining costs came in at just under $1,600 an ounce, which was improved by 4% on the first quarter.
Very good. Anything else, Paul?
Real quickly on the AIM market here, we have an announcement out that Thor Energy is vending out their U.S. uranium and vanadium projects in Colorado and Utah to fellow AIM-quoted Metals One. Thor will now concentrate their corporate expenditures on their natural hydrogen and helium interests in the USA, whereas Metals One will in this deal will concentrate some activity now specifically in the uranium space. There was about over $1 million expended on the properties previously, or million sterling, I should say, by Thor Energy on these projects. So it will be something where Thor would hope to recover the money over time as far as sale and purchase agreements, but they will largely recover those funds according to the arrangements.
Very good. Hope everyone has a great weekend, and we'll be back next week. Thanks.
Very good. See you.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.